Good afternoon. I'm Carlos Fernandez, Policy Analyst at the Vegas Chamber. I'd like to thank you all for tuning into the Paycheck Protection Program Flexibility Act with the Small Business Administration District Director, Joe Amato, with the Vegas Chamber President and CEO, Beth Sewald. Before we get started, I want to take a moment to explain some features of this call. In order to preserve high sound quality, we'll be muting everyone on the call besides our presenters to make it easier for everyone to hear it. If you'd like to ask a question, there are a few ways you could do so. If you join this call on the web or through the mobile app, you can ask a question by using the chat feature on the interface. We'll ask your question on your behalf. You can also ask a question by clicking the hand raise button on the interface. We'll call your name and unmute your line so you can ask your question. Once you have asked your question, we'll remute your line so everyone on the call can hear the answer. In order to preserve time, we ask that you please keep questions brief, and we'll be taking all questions at the end of the call. Now please welcome the Vegas Chamber President and CEO, Beth Sewald.
Thank you so much, Carlos, and thank you everybody for joining us today as we partner with the Nevada Business Information Network for this webinar today with Joe Amato from the Small Business Administration about the recent passage of the Paycheck Protection Program Flexibility Act of 2020. Joe, are you responsible for that name?
No, not in the least.
All right. Well, the PPPFA, as it's called, will now provide small businesses a lot greater flexibility. And Joe's here to talk with us about some of the things that it's going to make easier and to make dollars more accessible to folks. We're going to talk about those and answer your questions today. Before I introduce Joe, I'd like to give you a couple of highlights, things that are happening this week and next week at the Chamber. We're going to be hosting a webinar tomorrow, that's June 10th, to discuss more funding opportunities for you, Clark County Grant Fund. So you're definitely going to want to check that one out. Also, applications, I want to let you know that applications for the Chamber's Leadership Las Vegas program are open. That's a 10-month program that really gives you a deeper understanding of Southern Nevada so that you can really fine-tune and hone those leadership skills with a greater knowledge of Las Vegas and the entire city and Southern Nevada for that matter. Applications for that are due on June 11th. Also, next Monday on June 15th, you're not going to want to miss our interview with Wynn Resorts CEO Maddox. That interview regarding Wynn Resorts is going to give you kind of a behind-the-scenes look at everything that the Wynn has been doing. It'll give you a firsthand glimpse of some more of the behind-the-scenes and inner workings of the resort as they've been preparing to open. So please join us for all of those programs that we're offering through the Vegas Chamber. And now it is my pleasure to welcome to the panel today, a panel of two, Joe Amato from the Small Business Administration. Joe, I just want to say thank you so much. You've been so accessible to our members. There have been folks who've called me directly and I've connected them directly with you, and it almost doesn't matter what time of the day or night it is. You've been accessible and you really have a heart for service. So I just want to thank you first.
Well, I appreciate that greatly. Thank you so much. We ready to go?
Yeah, we're ready to go. We are ready to go. So tell us about the Paycheck Protection Program Flexibility Act. What all does that do?
Okay, well, let me start with the important stuff first. As of the 6th, which is 3 days ago now, the last numbers we got, there have been 38,723 PPP loans approved, PPP funding approved in the state of Nevada. Over $4 trillion, listen to me, $4 billion. I wish it was 4 trillion, $4 billion. So there has been a great job done by the banks, the lenders here in the state of Nevada. The national lenders have serviced the state of Nevada to get funding to Nevada small businesses in the tune of 38,723 loans. I'm not sure, do we know how many small businesses there are actually in the state of Nevada? Do we know what that total number might be?
No, we don't have a total number, not an exact one anyway.
Okay. Well, again, it seems, I'm hoping that's a good percentage of the businesses that needed PPP funding have gotten it. The good news is for those in the last 3 weeks of this program, the program that obviously will end on June 30th, 2020, there's still $130 billion left in the PPP funding program. So the rumors that started a couple of weeks ago, the program is going to run out of money. The program is going to run out of time before it runs out of money, because actually the 130 billion is growing as opposed to being reduced. Where we were burning at one point over $1 billion a day in new PPP fundings. We're now actually adding back because there's either been duplicate approvals or some people have decided they didn't want the PPP funding. So there's more money going back into the program than coming out of it. So that's a really good situation to be in. We're just not sure what they're going to do with the 130 that's been appropriated by Congress if this number continues to grow when the program ends on the 30th. The most important thing about what's happened with the Flexibility Act, and this is a process that started about 4 or 5 weeks ago in a memo that I won't say who authored it, where we're saying that 8 weeks was definitely not enough. We wanted to get ourselves in a position where, what do we do after 8 weeks if, because of ramping up, because of state closures, because of so many things that were affecting the business's ability to be fully operational, what we were going to do with the money that was left after the 8 weeks? Well, the Flexibility Act addresses that, and that's one of the first points I'll take care of. For anyone out there that has PPP funding, that has received PPP funding, or that will receive PPP funding, for those who received before June 5th, after that 8 weeks, if you still have funding remaining, so say you got $1 million in PPP funding because of staffing issues, because of closures, because of the inability to fully be operational, you have $500,000 left after the 8th week. This change in the Flexibility Act allows you to continue to use that money for payroll and other eligible PPP expenses for up to 24 weeks. So a lot of people have asked me, well, if I have no money left at the end of the 8 weeks, well, the Flexibility Act doesn't work for you. You've used your money as you plan to use your money, and the money's done. There's no additional money to be asked for. There's no additional PPP funding. But if you are a business, which a lot of our restaurant businesses did, a lot of our resort businesses did, there's businesses that are part of the supply chain that were interrupted severely or were deemed non-essential businesses and still went for PPP funding, yet had a very hard time getting their employees back. So they may have a lump of money, and it could be anywhere from $1,000 to, as much as $9 million when you look at, PPP went up to $10 million. There could be money left in your coffers to be used for payroll and other eligible PPP expenses after the 8-week period. And what Congress did basically was match, for all intents and purposes, the idle program, which runs to the end of the year as well. And that 24 weeks actually takes you to December 31st, 2020, which at that point, if you still have money left, that will either have to be turned back in or it can turn into a loan at that point. But now you have the remaining of the year to use whatever PPP funding is still available to you from your original funding amount. There's no new funding, there's no additional funding, it's just from the original. So that is the first and most important point for everybody to realize. And 90% of the questions I get is, well, I'm out of money, does that matter for me? I said, no, it doesn't matter for you. It's only for the people that still have money left after the 8 weeks. Okay, that's number one. Number two, and very important, is originally the law was set up that 75% of your funded amount, your PPP funding amount, had to go toward payroll. So if you received $1 million in PPP, $750,000 had to go toward payroll. And the other 25,000 or 25% or 250,000 or other 25% would have to go toward eligible PPP expenses, which remain the same. It's mortgage interest, it's leases, rents, utilities, sort of occupancy related expenditures. That has not changed. What has changed in the rule now, instead of having to accomplish a 75% minimum in payroll expenses, now has been reduced to 60% minimum in payroll expenses. So again, if you get that hypothetical $1 million in PPP funding, you now have to use $600,000, at least $600,000 toward payroll. You can use the other $400,000 toward mortgage interest, rents, leases, utilities. The SBA did this specifically, and Congress did this specifically because they were hearing from constituents that our biggest expenditure right now is the rents that we have to catch up on. The rents that we have to pay. The fact that that we didn't. Sorry about that. The fact that we didn't have business or revenue for these last couple of months. Now the landlords are expecting payment as we're reopening. We could use that PPP funding to cover that. So the change here is instead of 75%, 25%, 75% payroll, 25% eligible PPP costs, it's now 60% has to be for payroll and 40% can be for eligible PPP costs. So for businesses especially that can't ramp up still and may not be able to ramp up to the end of the year, I was talking to a convention service business today that they don't see any business coming back till January 1st. You know, they're trying to work on some hybrid things and some change in direction of the company, but they don't see the employee count growing until probably the first quarter of next year. So they're going to make some changes, which will allow them in this case to reduce their payroll amount from 75% they originally targeted to 60%. And they're going to use the balance of money to help them in other areas like the rents and leases and utilities and such. So that basically, for all intents and purposes, should be very easy, an easy accommodation for businesses like that. For restaurant businesses that are tied to resorts, thank God, I hope you're hearing the same thing I'm hearing, that the resorts, the occupancies are a lot higher than they thought they'd be. People are coming back. I drove down the strip on Friday night and it was bumper to bumper traffic and I was happy. So, and I saw people filling the sidewalks, some with masks, some without, some social distancing, some without, but it seemed like, you know, people want to be here. And I just spent a couple of days in LA and San Diego, and especially in LA, I mean, it's a ghost town. You know, there's people in California that want to come to Vegas now just to get away from the incarceration of being shut down and getting back to the vitality of what Vegas is. So, Mary Beth, I'm hoping you're hearing and seeing the same things we are, that we may rebound faster than we hoped and hope and prayed for. So that would be a great thing. Our focus really is, as the SBA, is on recovery, getting businesses back and get them stabilized, and that's some stuff we can talk about later. The other thing that has basically changed is if you end up with PPP funding, we want you to be forgiven. We want it to be 100% forgiven. We want the lenders want it to be 100% forgiven. And I'll give you two reasons even more now. If your loan was closed before June 5th and you have a loan portion left, it was supposed to be paid back within 24 months, 2 years, at a 1% interest rate. If your loan was closed before June 5th, that still is intact. If your loan is closed after June 5th, you now can basically get a loan up to 5 years. So if you are left with a large amount of loan, it gives you a longer amortization to pay it off, and it's still at the 1%. Between you and I, banks don't like that. I mean, to hold on a loan for 1% for 5 years is not enjoyable to them. So there's going to be a great incentive for making sure that business is fully forgiven. For a business that closed their PPP funding before June 5th and do have a loan balance at this point, they can petition the lender, and the lender and the borrower have to mutually agree to extend the term to 5 years. It's not just the lender dictating to them. It's not the borrower dictating to the lender. They both have to mutually agree. I'm going to tell you, most lenders don't want to hold a 1% loan for 5 years. It's not in their best interest. It's not in the best interest of lending. So I'm going to hope that 99.9% of all PPP fundings are fully forgiven and we don't have to worry about this. But that is definitely another situation that is going to be working in the best interest of the small business should they have to carry a loan. Now, not 2 years anymore, but 5 years, which means it's a lower payment, which is obviously good for the business. The new rule also confirms that the closing date for PPP is still June 30th. June 30th, 2020. There will be no applications taken after June 30th, 2020. I will tell you that the majority of lenders are not taking applications at this point. They've already stopped. They're just processing the PPP applications they have. I do have a few lenders nationwide that are still, both locally and nationwide, that are still taking PPP applications if they do arise. The people can call me if they're still wanting to apply for PPP and haven't been able to, and I will direct them to which lenders are available. You can put my email address on the chat site at joseph.amato@sba.gov.
So Joe, let me interrupt you for 2 seconds. You said there's 130 billion left, right?
Yes.
So are the banks just overwhelmed? Why are they stopping taking applications? Because people still need the money.
No, actually, the applications have trickled down to a handful. I mean, there are still people getting at PPP applications in, but it's nowhere near the volume of tens of thousands a week. It's now to a handful a day, if that many. Several lenders I've talked to basically have shut down because they just weren't getting any applications anymore, and they're really focusing now on the forgiveness side. So the 130 billion was, there's a reason, and you and I can talk offline of why it ended up with too much money, because that usually doesn't happen in government, but there is a reason, a formula, calculation that was erred in the side of caution and actually provided too much money. And I think we're hoping the Congress is going to do something to help reappropriate that money in areas like the idle funding and possibly in enhancing some things going on with SBA Express, as we talked about offline beforehand. Now, this is something I want to read directly. They extended the deferral period for the borrowers of payment of principal, interest, and fees on the PPP loan. It was originally 6 months from the day of application or the day of approval. You were deferred for 6 months. It's now been extended for, if the borrower does not apply for PPP loan forgiveness, okay, 10 months after the end of the borrower's forgiveness covered period. So now it's, instead of 6 months from the day that you get funded, it's now 10 months from the end of the borrower's forgiveness period. So say in the end of September, you apply for forgiveness and you had a $500,000 PPP funding and $50,000 was not forgiven because of the way you used the money. That you still will not have to make a payment for 10 months after your forgiveness period, your forgiveness covered period ends. So it's 10 months from there until you have to make the first payment. And then it could be from a 2-year to a 5-year. If it's after June 5th, it'll be a 5-year loan period. If it's before, it'll be either a 2 or a 5-year loan period. I think that is it. Oh, the other thing. The program provides safe harbor, which means an extended forgiveness for businesses that were not able to achieve their full-time equivalents. Remember that originally the program stated that if you had 10 employees on your application, you had to have 10 employees for the full 8 weeks of the PPP period in order to be fully forgiven. Well, that was adjusted the first time with the unemployment exemption. If you couldn't get all 10 people back because they were all on unemployment, they didn't want to come back. Or now, if you make a good faith effort to get all 10 of those people back, and in that entire now 24-week period, you only were able to get 4 back, but you made every attempt and you document it. You narrate how you made every attempt. Even though you didn't receive the full employment equivalent to your application, you could still be fully forgiven. So it's granting what they call safe harbor to the businesses that have done everything they can. And this could be more for businesses that had like 100 employees and because of one reason or another got 40 back, had to do with the shutdowns, had to do with non-essential, had to do with, the resorts, so on and so forth. And they weren't able to get past 40 or 50 employees as much as they tried to get back to that 100. As long as they documented, they will be granted safe harbor and they'll still be fully forgiven. So that is of the 3 big ones, meaning the 75 to 60%, the 8 weeks to 24 weeks, and the employee equivalents matching the application. That's the big 3 that have been the changes in the Flexibility Act.
Yeah, and that safe harbor is great too. I think that a lot of people will really be able to use that as well. So,
well, it's that lifeline. If you want to be a millionaire, it's the lifeline that you get. Because I've talked to, and you've talked to so many businesses. They're struggling to get their employees back. They're struggling to reopen their businesses that haven't gotten to that full-time equivalency and may not till the next year. I mean, because of the way things are going to re-ramp up. I'm hoping that it's not a necessary problem, that everybody gets back to full employment, because that's good for us and good for the economy. It's good for your membership, but it's hard to tell if that's going to happen. So they've given granted safe harbor that as long as they document their attempt to do everything they can to get those people back, they'll be still granted forgiveness.
Okay. And I wanted to go back to clarify your question earlier about the number of small businesses. It's 250,000.
Okay, so of that 38,000, and that's total business, that's all sizes, correct? Yeah, so
Small.
Okay, all right, so 38,723 of them have gotten PPP funding.
That's pretty good.
It's good.
That's not too bad. Okay, I've got some questions coming in. Are you ready for questions?
Absolutely, I'm here.
Okay, here we go. We kept paying our employees the same as we were waiting for the PPP money to be approved. I see when it comes to forgiveness, it only starts from the day the loan was actually deposited to my account. Is there a way I can backdate that? I know they have extended it.
No,
Can't backdate.
no, we're paying actual payroll expenses going forward. We're not paying for accrued expenses. No.
Gotcha. Okay. Next question. We are fully operational, but we were not able to use all the funds after 8 weeks. Now, I haven't read this question since you may have already answered it, so forgive me. Are we still able to extend to 24 weeks? Is there a caveat to whether we can extend or not?
No, there's no caveat. Yes, they can extend.
Okay. All right. To clarify, are Nevada banks still accepting new applications for loans under the Paycheck Protection Program? The deadline, we talked about this, but I want to clarify. The deadline is still June 30th. Do you think there will be any extension in later legislation, or maybe not?
The deadline is June 30th. We do not hear or perceive there's going to be any extension. There are still some banks that are taking PPP applications, and we'll be taking them to June 30th.
Okay. Are there any exceptions to the requirement to return to a full employee headcount?
Well, like I just mentioned with the safe harbor, the requirement to get to full employee headcount has been sort of now become a more flexible request. It's not now no longer a requirement. The only requirement is that you document every attempt to get back to full employment. And if you do that, if you provide that information to your lender, they are supposed to provide you full forgiveness, even though you haven't achieved full employment during the 8 weeks, the 16 weeks, the 24 weeks that ensue.
Okay, so I just want to clarify this too. The Flexibility Act, the new one, that did not expand the definition of which businesses are eligible to apply, correct?
No,
That
it didn't. No.
Okay. All right. How long does it take for a bank to respond to my PPP loan application? That varies, right, by bank?
Well, I think by rule, they're supposed to basically process the application within 10 days of receipt for approval, and they're supposed to fund the application once approved within 20 days. So, we have lenders that are basically up against issues caused by the SBA process, that it's taking a little bit longer to get approval. We've had issues with the lenders taking a little longer than 20 days to actually get funded because they were, there's other nuances that's been involved. But that should be, you should be from application to funding shouldn't take more than 30 days.
Okay. All right. Here's a question about timing. Is it 24 weeks from when the loan was funded or end of the year to use the money? Because they say our PPP loan funded on April 30th. 24 weeks from that would be October 15th.
Okay, it's 24 weeks from the day you were funded. So, and it will not exceed, the 24 weeks cannot exceed December 31st, 2020. So basically, whenever you were funded, your original 8 weeks plus 16 will be wherever your deadline is going to be for submitting for forgiveness.
Okay, so 24 weeks out in this case would be October 15th. Okay.
Yes. Mm-hmm.
The lender of my PPP loan did not take into consideration other employee and payroll costs. The lender just went off the amount of the IRS 941 tax form and did not consider anything else. Is it possible to get the additional funds for those costs?
No, they did what's proper.
Okay, so they did the right thing there.
They did the right thing, yeah.
Okay. Have there been any updates on single member owners receiving full forgiveness?
We are working on that right now based on some information that came out of Treasury. There's some conflicting information out there right now. As far as we're concerned, and most of the lenders that we deal with that deal with sole proprietors, independent contractors mostly, have said that the maximum amount that any one of those individuals could be was $20,832. They're planning on forgiving the 100%, $20,832. there was some issue with sole proprietors and utilizing a different ratio, and we're trying to get that fixed right now. But I know that at the end of the day, the lenders are going to basically focus on full forgiveness when at all possible for independent contractors and sole proprietors. And we're going to try to correct what's the verbiage in a Q&A that came out of Treasury that isn't part of the IFR, but is definitely was some direction that was in conflicting with the IFR. So we're trying to get that fixed right now.
Okay. Next question. In order to apply for forgiveness, does all 100% of the money have to be spent?
From what I understand, yes. You should utilize all the PPP funding because if you haven't, whatever's remaining, you'll either have to give back or you're going to have to repay in a loan. But in most cases, with the extended period, everybody should be able to use their money. Nobody should have money left at the end. And if you do, then obviously your business isn't doing what it was doing previously, and that's disadvantageous. But if at the end of the 24 weeks you still have money left, I'm pretty sure the bank's either going to require you to pay it back or to wrap it into one of the loan, into the loan program, and you'll have to pay it back in 5 years.
Okay. Is there a calculator out there that people could get their hands on to determine their forgiveness?
Not really. I mean, forgiveness is still, Treasury put out that 11-page document that's still being evaluated, and which was basically supposed to be used as a calculator for forgiveness. I'm not sure what's going to happen with that. I know that there's been conversations about minimizing, since the average loan size is under $100,000, to basically, especially those who are smaller businesses, that there may be like a 1-page forgiveness document that just says, did you use 60% or more for payroll? Did you use 40% or less for other eligible PPP expenses? Did you make a good solid attempt at getting your own employees back? And you answer those questions, yes, you get forgiveness. We're hoping there's something simpler for especially loans under $350,000, but that's all in the works. I know as we're being told, there's ongoing conversations. Nothing's been solidified yet, but right now the only calculator there is that 11-page document that you need your CPA, your attorney, and your priest to help you fill it out, or your rabbi.
Right.
So we're hoping that changes. I hope I didn't get myself in trouble. But yeah, we're hoping that changes.
Time you're in trouble.
But we're hoping that we can get some adjustments to it, because it's 11 pages with probably about 8 or 8 pages of instructions, but still 11 pages too much. This is supposed to be an easily forgivable program based on what Congress designed, and we're hoping to get it back there.
Okay. This is a really long question from George Ogilvy, so bear with me, okay? And George, I'm going to read every word of it, okay? George is a friend of the chamber, as all of our members are, but I happen to see his name on this one. So George, this is for you. Okay. Does the language in the Extension Act, quote, an eligible recipient that received a covered loan before the date of enactment of this subsection may elect for the covered period applicable to such covered loan to end on the date that is 8 weeks after the date of the origination of such covered loan. Does that line, if you caught it all, and I can repeat it if you do, I know. Does that line mean that a pre-June 5th loan recipient can exhaust the loan proceeds in 8 weeks from receipt, apply for forgiveness, and lay off employees without it affecting the forgiveness?
Well, that was always the case. Our biggest problem with this program is if at the end of 8 weeks your business didn't pick up and there was no more funding to pay payroll for your staff, that there could be the possibility that you as a business owner would have to lay off those people you just paid for 8 weeks. So that had to change. That was always a part of the equation. What the Flexibility Act does is that if you receive the loan before June 5th and have not used all the proceeds of the PPP funding after the 8 weeks, you do have automatically extended additional 16 weeks to exhaust that funding for both payroll and other eligible PPP expenses.
Okay, that makes sense. George, if you didn't get that, just call us later.
Or George can call me.
Yeah. The paperwork is quite extensive from my lender. I heard that loans under 150,000 have an easier forgiveness paperwork amount. Can you comment on this? The size of the
I don't know where they heard it from, but it's a lie. Nothing exists yet that's easier than an 11-page document, and most lenders haven't received full guidance. See, the problem is from what I understand it, is we put out an 11-page document from Treasury. There was no specific guidance yet on the IFR, the interim final rule that gives guidance to the banks to how to articulate it and how to incorporate it. So the banks are basically sort of flying blind on forgiveness right now. We're trying to get that settled.
Okay.
But the 11-page document is the only thing that exists right now. As I just said a couple of minutes ago, I know there's conversations about the opportunity or possibility that a shorter form will be created, but that has not been created yet.
Okay. This is a clarifying question. They say to clarify, can you pay previous rent or utilities? If I'm understanding correctly, you can use an additional 15% rent and utilities up until December 31st.
Yes. Payroll is going forward. If you have some rent, lease, utility expenses, or other eligible PPP expenses that you have to cover in your current period. And my understanding is even if it isn't accrued on the eligible expenses, then yes, you can pay those with PPP funding.
Okay. Is there any conversation about a second PPP plan after June 30th?
No.
Have you heard any more talk about the C6s?
I had that conversation with some of the congressional staff today. The administrator and Steve Mnuchin, the treasurer of the head of Treasury, is going before Congress tomorrow, the Small Business Committee of Senate tomorrow. And that's one of the questions that they're asking themselves is what would be the next step? What are they planning? You know, if they're planning anything.
Okay. This person says, so I applied 30 days ago. Can I apply with a different bank now?
Well, if they applied with one bank and that bank has their application and possibly has their approval, they would be not allowed because the E-Tran number has been issued. They have to find from the original bank that's had their application for 30 days whether or not they applied for an E-Tran number. If they did, then they're sort of stuck with that bank. If they didn't, they could rescind their application and apply with a second bank. But they have to, once the E-Tran number is issued to the first bank, if it is, then they're basically locked in with the first bank.
Okay, so you can't have two loans going at the same time?
No, you should, no. In fact, it caused a lot of problems with people doing that.
Okay, it's a good question though.
No, it's a great question.
Yeah. Will there be any new rules coming out of Treasury that I need to watch for relating to PPP? Any new rules that you know of?
Everything that I've sort of talked about, so you know, in passing right now, there's possibilities there will be some additional changes, especially in forgiveness and guidance for forgiveness, especially with possibly the reappropriation of some funds to help maybe the idle program or SBA Express. You know, there's a lot of conversations going on all throughout Washington. I'm not sure what's going to end up being solidified or becoming a new part or new guidance, but there are conversations going on, especially in those two areas.
Okay. Seems like this question came up about 3 months ago when this all started. Is there a personal credit check to apply for the PPP? Do they check your personal?
No, because there's no personal guarantees. No, the idle loan program definitely has a credit check, but PPP does not.
Here's one I haven't seen. Can you refinance the idle into the PPP?
Okay, so remember you can basically, and this is a little bit crazy and it got a little bit tenuous with some of the banks, that when you receive an idle advance prior to getting PPP funding, the bank is supposed to take the idle advance portion and deduct it from your PPP funding. So if you had a $10,000 idle advance and you received $100,000 in PPP funding, you would basically receive $90,000 in PPP funding because they treated the idle advance as a grant, and you can't have two simultaneous grants with the federal government from the same agency. So that was one portion. One bank in particular, which I will not name, was starting to take idle money out of people's bank accounts and funding the full PPP loan. The way the rule read is that if somebody received idle money prior to PPP and used the idle money for payroll, then at that point, the bank did the right thing. But if the bank just arbitrarily started taking idle advances out of people's accounts, it was incorrect, completely incorrect. Unless that they talked to that borrower and said, listen, did you use this idle money for payroll? Because then they were eliminating duplicity if they took it. But if the person said, no, I didn't use it for payroll, I used it for operations, there was no reason to take that idle money. So that is one segment of this conundrum. The other part of it is say you received $100,000 PPP funding and you received $25,000 in idle funding. You got an idle loan of $25,000. You could take that $25,000 in idle loan and you could wrap it in as an eligible PPP expense because there's less than 25%, or now it's less than 40%, right? So you could take that idle loan if it's less than that 40% right now of your total PPP funding, and you could wrap it into your PPP funding and get it fully forgiven, get the idle loan fully forgiven. Mm-hmm. Now, I tell a lot of people, unless there's absolutely no reason they want, they're worried about an idle loan that has a 30-year amortization and 3.75% fixed, and you don't have to make a payment till the 13th month. If you really want to wrap it into your PPP funding, that's fine, as long as it fills those parameters. You don't want to wrap it into your PPP funding if it ends up with a 2 or 5 year loan compared to a 30-year loan, even though the rate's lower. I tell a lot of people, and this is sort of an aside, a lot of people are getting idle funding and saying, I want to return it. And the first thing I tell them is your business back 100%? Do you have more money than you know what to do with? Don't return the idle funding right now, because to me, you're crazy. If you got a $150,000 idle loan, you can hold on to it for a year. You don't have to make any payments for a year. The accrued interest is wrapped into the actual payment of the idle loan. There's no prepayment penalty. I'd rather see you hold on to that $50, $100, $150,000, have it sit in your bank and draw interest, okay? And then in a year, if you don't need it because business is great, just return it. I'd rather you do that than call me 6 months from now and say, I returned my idle loan 3 months ago and I need money and the bank won't give it to me. Mm-hmm. That will break my heart. So I'm talking to people every day and counseling them on financial matters, saying, listen, you get the idle funding, you're one of the lucky few. Of almost 6 million applications, they've approved 10% of them. So the idle program is slow moving. If you get money and you get approved, it's better to hold on to that money. It's cheap money. 30-year AM, 3.75%. If you actually use it, it's very cheap money. And there's no certainty that you can go back to your bank and borrow, if you get later. So I'm telling a lot of people, hold on to their idle money, hold on to it for 12 months, return it on 11 months and 25 days. Return it back to the treasury. At that point, you don't owe a dime because the accrued interest is built into the actual payment. So until you start making payments, you don't have any accrued interest. That's how I understand it. Now, there might be a nuance I'm missing, but right now, cash is king. You know that, Mary Beth, more than I do. Cash is king for these businesses. The ones that have the cash are the ones that are going to survive, and I believe are going to prosper. There is going to be a recovery here. There's going to be a renaissance here. That's the way the American people are. But I'd rather you keep that money in hands and not need it than give it back and say, man, I wish I would have kept it. So.
Okay, we have a live question, Joe, if you'd like to take a question. Cynthia Throm has a live question. Cynthia, can you unmute your phone? Are you there?
Yes.
I'm listening.
Did we lose Cynthia?
Unmute.
Okay, there
Can you
you
hear
go.
me now?
Yes, go
Can
ahead.
you hear me now?
Yeah.
Okay, I'm sorry. The question is, because it's come up several times, I'm an insurance broker. I have clients that had stopped providing benefits for different reasons and now got the PPP loan, and they're asking if they write a new plan to help their employees. Can that qualify for forgiveness, or did the insurance have to be in place prior to the PPP loan?
You got me there. I would think if it's a payroll eligible cost, Let me look into that one. I'm not sure.
Thank you, because no one's been able to answer it for me. So
I'll get you.
but it's a good thing for employees if they could use it for that. I mean, that would be a nice benefit.
I would think it's okay because it is an eligible payroll cost. But if you didn't include it in the original PPP application, it may not be able to be included. But definitely send me an email directly at joseph.amato@sba.gov and just reiterate your question. And I'll get an answer for you. And I'll definitely I'll include Mary Beth in the answer as well, so she can tell other people within the chamber what the answer
I
is.
appreciate that. Thank you.
I think you can, but let me be sure because I don't want to speak out of turn. This is the first time I've ever heard the question.
And again,
Thank
that's
you.
joseph.amato@sba.gov, just so everybody knows. All right. Rachel has a live question as well. Rachel, go ahead and unmute your phone and ask your question. We had Rachel. Do we still have Rachel? Okay, we'll try to get Rachel back in a second. In the meantime, with the idle, can you restructure payment if you pay a portion of it back after the year with idle? Restructure the payment.
I want to make sure I heard it right. Go ahead.
Well, under the idle, can you restructure payment if you pay a portion of it back after the year?
So you have an idle loan, you pay a portion. So basically, say you got an idle loan for 100,000, you prepay, you used 50 and you prepay 50. Yeah, they would definitely provide you a modification based on the outstanding balance. I would think that that's something they would do. If they would do a 1502 modification would allow you to basically just change the total loan and rechange the payment. I'm pretty sure that's how it would work.
Okay. How do employers pay themselves if they normally take the business's profit rather than give themselves a wage?
All right, let me see. Say that one again. I'm sorry. I want to make sure I got the answers right because these get a little more complicated.
Sure. So instead of giving themselves a regular paycheck, right, they just take the business's profit. So they don't have a regular pay. They just take whatever the business makes.
Well, an idle loan program, if we're talking about that still, there's some limitations on what you can do as far as distributions. If you take distributions in the normal course of business instead of pay, you definitely have to be cognizant of the fact that that's based on the loan criteria, that's not allowed. But I think if that is the only way, like if you're not on a regular W-2 salary and that's the only way you get compensation, whether it's on a quarterly basis or whatever, I think you should definitely, because this was put together last minute. One of the best things you can do is have them reach out to our office and we'll do some research on it before they do their distribution to make sure they're not violating or defaulting on the idle loan. I would say that my best guess is as long as you're maintaining a profitability on the company and you're leaving enough money in the business to pay for the idle loan payments, that you should be allowed to take distributions after that. But and I've had that conversation with a couple of companies already, but I just told them, basically make sure that you're able to document what you're trying to do, get that to our office, and we'll get a quick answer for you.
Okay, great. This next question is from a person. They say they own a spa with massage services and their employees are paid per client appointment rather than per hour. They say, how do I average their pay to still receive forgiveness?
Well, whatever they provided, if they were employees, whatever they provided to the lender, whether it was a 940 at the end of the year or W-2 schedules, whatever it is, I would just follow that same suit. So if the individual received $36,000 a year based on that kind of payment strategy, as long as during that 8 weeks it calculates to that same number and not less than 75% of that number, then that would be that would definitely be forgivable.
Okay. Very good. If we meet the payroll threshold, what can the remaining balance be used for? Just to clarify the other, besides payroll, what other things can people use the money for?
Mortgage interest, lease rents, and utilities.
Okay. We have Rachel back on the line. Rachel, can you unmute your phone? Okay. We're having technical difficulties today, Joe. Sorry about that. We also have Laura Freeman on the line. Laura, are you there?
Hi, good afternoon. I have a question. I know we've been talking a lot about the idol. When we applied for the idol, we thought that this was given as a grant, right? But now in the PPP application, the forgiveness application, it states to add it. Now, are we supposed to add that on top of the PPP funds so that becomes one loan? Is that how that would be looked at? And is that money, do we split that percentage to go the allotted percentage towards payroll and then the other percentage towards expenses?
You're overthinking this. Wait. First of all, I answered this question a couple of minutes ago, all right? Idle loan was never a grant. The idle advance, which was the second edition of the idle loan program, was the grant portion, and it still is the grant portion. That's up to $10,000.
The advance. So how do we know if it was an advance or the loan?
Because you would have received something called an idle advance, which is completely different than when they notify you about an idle loan. The idle advance basically was just $1,000 per employee. You asked for it in the streamlined application. You basically told them how many employees you had, and you said you were interested in getting up to the 10,000, and then they sent you some kind of variation based on the number of your employees.
So that's the advance.
That's the advance. So then you get a second notification which says this is your idle loan opportunity, and it's usually from 0 to whatever number they've issued you as your maximum number. Right now that number is 150,000. So that is the loan portion. So as I explained earlier, if you received an idle advance before you received your PPP loan, the idle advance should be deducted from your PPP funding. That's the way the rule reads now. Now, some banks are doing that, some banks aren't, and it's up to what the bank does. The individual basically has safe harbor and basically defers to what the bank did or did not do. If you basically get PPP funding and say you get a $100,000 award for PPP funding and you had a $2,000 idle advance, you're going to receive $98,000, and you're going to use that $98,000 in the same vein in the 60-40 split that we're now at, as opposed to the 75-25 split that was before.
Okay, so we have to see if it was an advance or a loan. That would have been disclosed in.
Yeah, I mean, the advance is pretty simple. It'll be say it's an advance.
Okay.
The loan will be stated as a loan. It has nothing to do with PPP whatsoever.
Got it. Thank you.
Okay, thank you. We have Rachel back on the line. Rachel, are you there?
I am here. Sorry about that.
Okay.
Okay. My question is on the loan forgiveness for employers who are like sole proprietors or single member LLCs. The original paperwork on the application, there was this worksheet that showed that we as the owner ourselves, if we pay ourselves W-2, that we couldn't list ourselves. And then I read that it was like 850 seconds of the loan that would only.
No, don't even, all this stuff right now is conflicting.
Okay.
I just said this about 20 minutes ago. At this point, if you were a W-2 employee and you applied as a business as a W-2 employee, this doesn't affect you at all. You know, it's very confusing. It doesn't affect you at all.
So I
if
can
you're
apply.
an independent contractor, it doesn't affect you at all. The only thing they're saying is if you're a sole proprietor and you received funding, the maximum amount they're saying is now based on 850 seconds, which is totally in conflict with the 12-month average that they used in the IFR. We're trying to straighten it out right now, but a lot of people are worried about this, and the banks are basically going to say that if you were a sole proprietor and you got, you know, whatever amount of money you had, and you proved that you used all the money for payroll over the 8-week period or whatever extended period now, that you're going to be forgiven.
Okay, perfect. And then if I receive the PPP before I receive the idle, I don't have to worry about what you just said about the.
Don't have to worry about it at all. Excellent.
Perfect. Thank you so much.
No problem.
All right, Joe, I know we're getting close to our time here, but we have another live question. Jenner is on the line with a live question. Jenner, are you there?
Yes, thank you so much. You mentioned the 8-week and the 24-week program. The 24 weeks is the new one. Can you hear me?
Yes, I can hear you.
All right, great. Is the calculation, the payroll calculation, still 8 weeks? And do you get to choose which your highest 8-week payroll would be?
No, come on. Again, I want to make this simplified for you. Whatever you applied for with your PPP funding and that you cannot use, if you're a business and you use your employees as basis, if you're an independent contractor, this wouldn't matter to you because you're going to use the money in 8 weeks no matter what. If you're a sole proprietor, this is not going to apply to you. But if you're a business and had employees, and during the 8-week period that you originally estimated your 2.5 times monthly payroll, if during that 8-week period you still have funding left, you have funding remaining because you weren't able to fully staff up, then after that 8 weeks, whatever that fundings are remaining, you can use that funding for an additional 16 weeks until the funding's exhausted. So I gave you a scenario. You have $1 million in PPP funding. You want to use it all for payroll. You use only 50% of the funding because your staffing has been limited in that first 8-week period. That $500,000 that's still remaining, you can use over the next 16 weeks in the same level and methodology as your business used to pay those people prior. You don't change their payroll structure. You don't adjust their payroll structure. However you submitted your application originally, you maintain that same type of payroll structure.
But the calculation will still be for just 8 weeks for forgiveness.
No, you have to listen to what I'm saying. Your calculation, there is no calculation. If in the first 8 weeks you don't have enough employees as a business to utilize all your PPP funding, you just keep on paying them every other week until you have no more money. Don't even think about the 8 weeks anymore. It's now, it could be 12 weeks, it could be 16 weeks, it could be anything up to 24 weeks. It's whatever you have paid the people that you have. If you continue to grow your payroll staff, as you go in through the 24-week period, you take all that in consideration. There's no real calculation. The only calculation that mattered is what's 2.5 times your monthly average when you did your application. And then what you tried to do is use that money as best you can over the first 8 weeks until the Flexibility Act was enacted. Once the Flexibility Act was enacted, then you had an additional 16 weeks above and beyond the original 8 weeks to utilize whatever money you had in the same manner and form that you paid your staff prior, your as a business, however you paid your employees prior. So you don't have to recalculate anything. You just continue to pay them until you have no more PPP funding, and then hopefully your business can pay them the rest of the way on their own.
Great, thank you. This can be complicated, and I know you get asked the same questions. This is, you told us earlier, your 100th webinar, I think you said, Joe?
Yeah, this is my 100th webinar and my 101st gray hair.
I think you got a little more gray hair and less hair overall, but that's okay. That's another webinar. All right, Joe, let's give your email address, joe.amato@sba.gov, right?
It's joseph.amato@sba.gov.
Joseph. Okay, gotta get that right. Joseph.amato.
Yes.
A-M-A-T-O.
A-M-A-T-O, yes.
Okay. Well, Joe, thank you again so much. You've been just a wealth of information. We really appreciate your time. And things keep changing, and it's hard for me to keep up with all this stuff. So we appreciate how good you've been. You're always willing to come on and to speak with our members. So we just really appreciate it.
Yep. And when you need me, I'll be here again.
Okay? All right. Good deal.
Thank you so much, Mary Beth.
Yep. And thanks to all of our members at the Vegas Chamber. Bye-bye. Have a great day.
Bye.